There's something fascinating going on in crypto. In the last few weeks, the altcoins tended to outperform Bitcoin. But at the same time, we didn't see Ethereum outperforming Bitcoin. I'm talking now about the last few weeks, last few months. Now why is that fascinating? It's fascinating because there is a mechanism between the pricing of altcoins and the pricing of Ethereum that I believe most people are not aware of. What happens when you buy an altcoin on a decentralized exchange is you swap that altcoin versus Ethereum and vice versa. You need Ethereum in order to buy the altcoins. Most altcoins are being traded against wrapped Ethereum as a trading pair. So it does get a bit technical here, but what is different to altcoins on decentralized exchanges versus to altcoins on centralized exchanges is that the typical trading pair is not versus Tether, but it's actually versus wrapped Ethereum. Now let's say you've got a liquidity pool, the altcoin is only traded in a decentralized manner. You've got a liquidity pool. On the one side, you've got, say, 100 wrapped Ethereum, and on the other side, 100 wrapped of that altcoin token. Okay, so you've got 1-to-1, that altcoin is worth exactly 1 Ethereum. Now let's say the price of Ethereum goes down by 10%. Per default, the US dollar valuation of that altcoin also goes down by 10%. So there is a direct link between the Ethereum price and the altcoin price. Thus, when Bitcoin is outperforming Ethereum, when Ethereum is doing worse than Bitcoin, when Ethereum potentially goes down in US dollars, and the altcoins per default should also go down. When they're not going down though, what this tells us is that they're outperforming even more than Ethereum, that the money is flowing directly through Ethereum to the altcoins. What we used to see in prior cycles, and this is now very atypical for the current cycle, what we used to see in prior cycles is that after a bear market, we first saw Bitcoin recovering. And that kind of makes sense because Bitcoin is the safest of the cryptocurrencies. And so when you buy something in a bear market, you don't know how long you have to hold it until it recovers. So you have to be relatively risk off in what you're buying. You cannot buy an altcoin that inflates by 20, 30, 40% in supply every year because you don't know if that inflation will eat you up alive in a bear market. So you have to buy something conservative in a bear market where you can be relatively certain that at some point in time we will see new all-time highs. And so that's why usually in a crypto bear market, in recovery, that starts with Bitcoin because people are very comfortable dollar cost averaging into Bitcoin, but people might not be as comfortable to dollar cost average into the altcoin at number 200 or 300 in terms of market cap. So that's what usually happens. Okay, we see the Bitcoin dominance rising as we come out of a bear market. Now what then typically happened afterwards is that the gains or parts of the gains that have been made with that Bitcoin rally shift over to Ethereum because Ethereum underperformed Bitcoin during that time, right? Bitcoin led the bull run from that bear market. So people buy into Ethereum, they shift money from Bitcoin to Ethereum. And what then happens once Ethereum also rose is that people get into the altcoins. So there is a gradual increase in risk tolerance, and as the altcoins then rise, when they have reached their top, that's then the time when the bull run tends to be completely over. That's the time when risk tolerance is at its highest and when then people get maximally wrecked. But what's so fascinating with the current situation is that we see Ethereum doing poorly, the altcoins doing relatively well, and that somehow Bitcoin and Ethereum move in tandem to one another to a degree. Now, why is that? I've got my theory here. So of course we do see Bitcoin dominance rising, right? We come out of the bear market, Bitcoin dominance is rising, and now we've got even the acceleration with the Bitcoin ETF inflows. So that all makes sense. But why now already the altcoins? Why isn't Ethereum doing better? Why aren't the altcoins still getting crushed? I believe it has something to do with Ethereum itself not being that great of a value proposition anymore. The issue is that Ethereum nowadays is already so large in market cap and has so much competition from other layer 1 competitors, right? From other smart contract platforms, that there's no real unique selling point for Ethereum anymore. The only unique selling point one might think of is that Ethereum could potentially have better tokenomics than Bitcoin, as in it has the burning mechanism, it might shrink in supply if it's used enough. That's the only potential reason to get into Ethereum. But then, again, on the other hand, there are tons of other smart contract platforms that also have pretty much stable supply, potentially shrinking supply, that are way, way cheaper. So Ethereum got more and more competition. Bitcoin didn't get that competition, right? Bitcoin doesn't have any other alternative store of value blockchain where people might be comfortable just dollar cost averaging in for the next 10, 20 years. So Bitcoin doesn't have the competition, Bitcoin can still nicely rise. But why then the altcoins? Why are they doing well? Again, the altcoins, they still have the upside potential. So if you made your money already in Bitcoin and you're now considering, where do I put this next towards? Where can I continue to ride this wave even when the Bitcoin upside might not be that high anymore? Then you're not looking at Ethereum anymore. You're looking at the altcoins, and especially the altcoins that are relatively small in market cap. So everything below, say, 300 million, those kind of altcoins tend to do the best now. So all those narrative-driven altcoins where the current bull run is really accelerating, for example, AI, it's crypto gaming, it's DePIN, those kind of very new, fresh narratives, those kind of altcoins do very well, especially when the market caps is not yet in the billions, but just in the maybe tens of millions or a few hundreds of millions. So people play the upside, or they play simple crypto exposure. People don't play anymore with this gradual increase of risk exposure, because there's really, when you look at the numbers, there's really not that much of a correlation between delta exposure versus market cap. So to say it in plain terms, just because Ethereum is, say, half the size of Bitcoin or 1/3 of the size of Bitcoin, whatever it is at the time of the day, just because it's 1/3 smaller doesn't mean that the delta is 3 times larger, as in the price fluctuations are 3 times larger. Unfortunately, that's not the case. So market cap is a pretty bad proxy actually to see how much will a price go up and down. It is a relatively good proxy if you just look at liquidity pools. So when you've got an altcoin that is only traded in a decentralized manner, you know the size of the liquidity pool, then you can estimate how much will the price be impacted, for example, if another influencer talks about it. Right? If you've got a liquidity pool of only, say, $200,000 worth of token in it, you can look up these liquidity pools on dexscreener.com, for example. But you know it's only $200,000, and then a medium-sized influencer, 100,000 subscribers, talks about this in an entire video, 20-30 minutes, and the price might easily go up 20-30%. If the liquidity pool, however, is 20 million, then that influencer will have pretty much zero impact on the price. So liquidity pools are a pretty good measure of price impact, of marketing efforts, of shilling efforts, of volatility in general. But market caps aren't, and market caps aren't necessarily one-to-one related to liquidity pools, especially when you've got centralized exchanges involved. Once centralized exchanges get their hands on an altcoin, once their ownership is very large as a fraction of all of the tokens floating, then it's very, very hard to predict price movements. Because first of all the buys and sells aren't transparent anymore. They're not just on the blockchain. So you can't use Dune Analytics. You can't look at how many people tend to be buying, how many people tend to be selling. You only get half of the picture by looking at the blockchain because you don't know what happens with centralized exchange trades. The second issue is that centralized exchanges manipulate prices massively, especially when they also offer perpetual futures trading. So when they offer bets on the price, because when they offer bets on the price, at the same time they own a lot of the supply, they can move the price in either direction and liquidate the masses of their customers, right? When the masses of the customers bet, say, on the rising price of a cryptocurrency, and they hold most of the cryptocurrency, and the liquidity pool on chain are relatively small, they can simply just dump the price. Super easy. When, however, most people bet on falling prices, they can just buy up a few more tokens. That's how we saw all the manipulation with the Tether token, TRB, with Yearn Finance. There's also how we see a lot of manipulation with Audi, for example, right? The BRC20 token. BRC20 is super tough to use. It's super clunky. You need like half an hour to buy a token. The Bitcoin blockchain isn't built for DeFi. So you have to do like 2 or 3 transactions just to buy, another transaction just to sell. It's super clunky, it's super slow, it's super expensive. Thus, it's also super illiquid. You have to buy them in brackets. So it's pretty similar to NFT trading. You have to like submit your offer to the chain. Somebody else has to accept it. Super clunky to use. So most people just use the centralized exchanges for it. But guess what? When centralized exchanges own all the trading, then they can move the price. And so they can then push it up or down, completely independent of what the fundamentals are. So be very careful with altcoin speculation when centralized exchanges are involved. At least try not to follow what the masses are doing. There is one important thing though to say about Ethereum. Ethereum tended to underperform in the last weeks and months. However, there is still a potential catalyst for ETH, and that is the Ethereum ETF approval. If there is an ETF approval, probably there will be at some point, right? BlackRock applied for it, Fidelity I believe as well. At some point we will get the approval for the Ethereum ETF. Who knows when that happens, right? Once it happens, it will be super great for the altcoins, because the altcoins, as they are directly linked partially with the Ethereum price, they benefit from this instantly. So once we get the Ethereum ETF, you might see a lot of rallies in the altcoin market as well. So not just because of that approval, but simply because the capital is flowing through. The only question is, when will that happen? And the problem is, when we don't know, and it could be a few months from now, it could be a few years from now, it's very hard to estimate when this happens. And the question then is, do you want to be exposed to the Ethereum price risk, to the potential underperformance to the rest of crypto, Bitcoin and the altcoins, and to wait for that approval? I personally don't do this. But another strategy would be to simply just dollar cost average into Ethereum, dollar cost average down, relatively speaking, because that's, I guess, the expectation, right? Ethereum is probably not going to do too well in the next weeks. Just dollar cost average down, and then wait for that approval, and be okay if it takes another 2 or 3 years. I don't know how long it will take, right? At some point, there might be a push up. When that happens, the altcoins will probably benefit from this as well. If it's the first time here, feel free to subscribe. A like would be very much appreciated as well. See you next time. Cheers.